Indeed, you did find it. I'm just getting myself situated here. I decided to go out for a walk before the stream, and it took me longer to get back than I was expecting to, so I just barely made it, but I am here. And then realized I didn't put up the link, so it's going to be one of those days. Hey Tim, it's good to see you, buddy. How was your vacation? Like you were on what? It was like a 3 week excursion? Like that was a hell. I mean, after 2022, 100% you deserve it. Everyone fucking deserves a vacation like that. I'm a little envious of you. It was really good. That's awesome. 10 days. No, it seems like 3 weeks. Just time just seems to stretch out longer when you're not around, Tim. That's all it is. All right, we'll give another minute or two. You'll also be pleased to know I adjusted the intro screen to fix the text. Since I know when I had changed it last week, I got a couple people unhappy about that. You missed my silky tones as well. Well, I very much appreciate it. I'm not sure if Tom will be here today. I know he said evenings on Mondays are a little rough for him. Jamie, it's like 5 in the morning for him or 6 in the morning. He won't be here. But we'll see. We'll see who all shows up. I'm still playing with possibly changing the time around again. Um, we'll have to see. It might just be one of those things. It's too early to try to be doing this. The community just isn't large enough. Because last week it was basically just me and Jeff. And while I love talking with Jeff, I don't know if that constitutes a need for a live stream. So I mean, worst case scenario, I might just actually record a YouTube video and just post it up every Monday if need be until we develop the community a little bit further. Wednesdays, however, Wednesday's going to be the me starting to do the quantitative trading educational stuff. That will definitely be live because I have no doubt you guys are going to have questions, and then it'll just make it so much easier to run that all through. All right, let's go ahead and get this party started. I'll just switch over. All right. So the last few days have been boring as fuck, as we've tend to see with Bitcoin and the crypto markets quite frequently. We just have like days or weeks of nothing happening, and then there's suddenly a big ass move that just wakes us all up. So as usual, we're gonna look at the higher time frames, just kind of get a gauge of the general market as a whole. It's always a good way to do this because it allows us to see where the price action is kind of pointing us as to what levels may be. And if we're lucky, we start seeing patterns of expected upward or downward action in the lower time frames. And if we start getting confluence, it allows us to establish a directional bias. I know it does, Harry. You that happened the very first stream, right? And I fixed it. And when I fixed it the second stream, I had people complaining that I had changed it. So I decided, in honor of you and Tim being able to be here this week, I'd swap it back to the original spelling. So it was intentional. I'm also thinking for Wednesday, we're probably going to do it through a Google Meet. The YouTube format I think will be difficult to properly do, and since I want to be able to do questions with you guys, and voice is going to be a problem. So yeah, we'll do Google Meets. I'll give you guys all the information for it. I thought about doing Zoom, but at the end of the day, I have professional access to Google Meets. So why pay for that, or why pay for a professional membership to Zoom just so I can have conversations longer than 40 minutes with you guys when I have that accessible to me? They basically work the same. All right. In any case, let's get started. We'll talk about everything else later. All right. So we're looking at the daily here. This reaches back all the way back to the end of 2022. Let's remove that. All right. And as you can see, we had our W back here. And this is, those of you who've been following this pattern for a while know exactly what I'm going to say here. We had rise level 1. We consolidated for what seems like forever. Then we had rise level 2. And in theory, I know there wasn't a ridiculous amount of volume here. This could have potentially been rise level 3, but I don't personally think it is. I think this has just been an extended boardroom, taking out some of the shorts, and we've now retraced to the 50 EMA. So we are due for a rise level 3 at this moment in time on the daily. However, one thing you will notice, almost every time we do, every time we have our pullbacks, see if I'm trying to find some good examples here. And unfortunately, I'm not. All right. Well, in any case, if you can see from this pullback, there is the possibility we'll drop well below the EMAs on our pullback. So there is the possibility that this is not our floor before rise level 3. At this point, though, anything is possible. Basically, from this point moving forward, we have a chance of hitting rise level 3. The fact that this has been riding the 50 EMA hard for the last 3 days, if it continues like this, speaks volumes to me. We're going to get a rise up. Whether it's an actual proper rise level or if it's just a spike up like a stop hunt before we finish our retracement, that's yet to be determined. But regardless, we're bound to have upward action on this daily chart, whether it's this week, this month, within the next few months. That's anyone's guess. All I can say for certain right now is we are now in position for a rise level 3 on the daily. And when we've had that stuff happen in the past, like here, we had explosive moves. So, I mean, this one back in the time, that was about a 40% increase, 36%. This one was a whopping 45%. So God knows what this one will be. In any case, I'm just happy I'm actually in the market at this point. Whether it happens today, next week, or whatever, I'm going to be positioned for that move. All right, so the daily, basically, we know we're ready for rise level 3. We might still be doing a retracement, but we at least are aware that that's the pattern right now. We look at the 4-hour. The 4-hour tells a slightly different picture. We had our M formation. And then we had, this is tough because I don't think this was a drop level 1. You could argue it. I don't think it was because we didn't really cut properly across the 50 EMA. When you're looking for a push across the 50, you're typically looking for something like this. That is a very noticeable volume drop. I mean, it is possible to have happen, but I mean, even when you look at the rise back here, it was a very clear move. This was kind of like, it's a tough call, but whether you consider that drop level 1 or not, it's ultimately irrelevant. Basically, we know, let's just assume for the time being, it was drop level 1. Then you've got a potential drop level 1 here. You have a potential drop level 2 here, and then we're waiting for a drop level 3. So in which case, that's spouting potential downward action. However, my own interpretation of this is that this was not a drop. This was literally just a stop hunt. Then we moved back up. Basically, this probably was like, I was going to say this is probably a fake move. And it happened Sunday to Monday. So we had our drop down. We had our stop hunt out. Then we had our proper move down. And this might only be drop level 1. So we have the possibility of retracing back up to here and then having our drop level 2. Or if you think this was drop level 1, this would be drop level 3. But either way, there's another drop expected. That's what I'm looking at this point. So then when you factor that in with the daily, Let me just remove these. When you factor that in with the daily where we are, remember how I was saying when we're riding the 50 EMA like this, that's usually a sign we're going to bounce off that EMA. Doesn't necessarily mean it's going to be a proper market maker rise, but it does mean we'll typically bounce. And so if that was to happen, there's a very good chance we could spike up right around to this area, and then that would constitute the retracement of the 4 level before another drop, and would bounce off these EMAs. That would be a proper spike off the 50, and then we could move down again, and then that would be the next drop on the 4 hour, and that would be a continued retracement of the daily. So we're seeing some confluence that there is a chance, well, there's a very strong likelihood of a move back up and then another move back down. You see it as a D1 and now in the boardroom? Yeah, so like that's how I'm reading it, Harry. Like this technically could count as a D1, but it's very sketchy. And being a fake move Monday there, it's just, it doesn't seem like it's enough for a drop on the 4 hour. Like you look at the other rises that we had, they were much more substantial. Like that's a proper rise. That's a proper rise. You know, like that's, you know, a ridiculous rise, but that's what you expect on higher time frames. You don't expect like these little dinky moves and stuff like this. So yeah, so basically it's telling me that in the higher time frames, we're expecting a push up likely to at least 28.4. I'm going to mark this down. 28.4, 28.3. If we look at an area of interest here, we're likely looking at, let's see if we can narrow this in. Okay, so for marking off an area of interest, we would be looking at something like this as where we would expect price to go, and then a rejection points. Well, conveniently enough, the 50 fib level on this big purple candle here is right at the start of this box. So this could be, let me just change this. This could be our first drop, or our first potential rejection point. Then we have the possibility of it rejecting here. And then if we're going to go up beyond that, this also happens to be, just eyeballing it here, but it looks like it might be the 50 fib of the next vector. Yeah, about. Like, I mean, it's slightly off, but fibs are never perfect. So that could be another strong rejection point. And then, of course, the third one will be the top of this, which would then be probably about the halfway mark on this vector. So it really could hit any three of these areas. So we'd have to look at things like the order books, liquidation levels, things like that, to see if we can find some areas that would make sense for that to go. As far as going down goes, there is a lot of room to head down, because we had such this massive spike up. We're actually hitting retracement territory of our spike up after the bank collapses in March, and that's a lot of room down. So ideally you're going to be looking for where an EMA and a vector connect, and there's no real vectors here. That is, what was the volume there? I feel like that was actually a really low volume push. So it was like right around here. I've seen worse, but yeah, that's pretty low volume. So really what you're looking at is here. This is our next area of interest. And if we blow past this, we're looking, Jesus. We are looking, this is when the bears are going to be screaming from the hilltops, because we're going to be going down to about 23 minimum. Like that would be our next rejection point. And we could potentially push far below there too. The fact that we have this EMA dicking around makes me wonder, though, if we might consolidate for an extended period of time, wait for this 800 to kind of push its way up, and then eventually retrace to, you know, the 25.6, 25.9 level. The 4-hour would probably take the better part of this week to actually hit this level. Now, that doesn't mean we can't come down. It just might not be a proper drop. Like, we could actually see ourselves, because it is possible this drop isn't actually finished at this point, because we haven't had a stopping volume candle. It stopped. You could, in theory, consider that stopping volume. It was relatively high volume. It just wasn't a vector. Like, it's higher volume than a lot of these other candles are, but it's iffy. And unfortunately, that's been a lot of the price action we've had to deal with. So there is the possibility that we actually have not finished this 4-hour drop, in which case we could find ourselves going down. We could retrace. If we retrace and then we start going down again, this would be the end of the drop. And then this would be the start of the next drop. But if we don't, if we just continue from here, we could find ourselves, hitting any of these rejection points to finish off the move. And that would be the first drop down. It could hit any of those as a potential stopping point, and then it would do its retracement, and then its next move is going to be a ridiculous move down, where this 800 EMA finishes. That's basically what I'd be kind of expecting at this moment in time. If we go to the 1 hour and kind of see where things are looking on the weekly setup. All right, so we had our multi-session M here that hit the high of the week. So that was a great entry if you happen to spot that. And we had our drop level 1. Then we consolidated, and then we just kind of trickled down. None of this really counts as a drop. It has just flowed downwards. And then it's just like this is a whole lot of, this is just noise. This really does not count as a 1 level drop. Like, if anything, if I was going to call it anything, I'd say almost this entire move was 1 drop down. Because that is not multiple levels. There's been no proper consolidation. There's been no retest. Like, sure, it stopped and kind of dicked around for a little while, but there's no stopping volume candles. Like, this is the nightmare scenario for trying to figure out what the hell the market maker's up to, because it's all over the place. But we'll assume that's drop level 1. Then we came up, we retraced, and we've just kind of dicked around since. We have not had another proper drop down, which means that we still potentially have 2 more drops on the 1 hour, which then, if we're factoring into our higher time frame plans, we could do the drop down to here or one of these other target spots. We could retest back up to the 50 EMA, possibly a little bit higher if the 200 comes down fast enough, because that would be the 50 EMA of the 4 hour, which would be looking for a retest. But we could do that. We could form like an H pattern or something, and then that could be drop level 3 on the 1 hour, or we could go down further to finish off drop level 3. I know this looks like a really bad football playbook, but basically it's just the 1 hour is messy right now. But because of the fact we haven't finished 3 levels downwards on the 1 hour, there is the possibility that the 1 hour finishing itself off finishes off our level 4 drop, whatever that looks like. Like, everything kind of plays into that scenario right now. So in which case, if we see the 1 hour finish its next 2 levels, and remember, the 3rd level drop does not have to go down further. So we could technically get a drop down here, a retest back up, and another drop right to this 26.4 again, and that would be 3 levels done on the 1 hour. It is 100% possible that happens. But basically, once we see 3 levels on the 1 hour, that's when we're looking on the retracement, or looking for the retracement on the 4 hour. That's what I'd be looking for at this point in time. Whether or not that's a valid trade, it would all depend on the price action at that time. But basically, everything is pointing out to me, we're probably going to be ranging for a little while, because this 1 hour is likely not going to go down that far. I mean, we're talking, if we're lucky, we're dropping down, what would this be, another 5% or so? somewhere between 3 to 5%, which is a decent drop. But then we're just going to be bouncing around here for a while until the markets decide what they want to do. So basically, it's one of those things. If you're in a trade right now, it might be decent. If you're not, it's probably going to be a whole bunch of noise and not really a lot of movement. You see the information on the second shoulder that formed on Monday or Tuesday? On what time frame, Mr. Harry? I'm assuming you're referring to this. But in any case, the 4 hour, okay. Yeah, so the we definitely have an M in play and a sizable drop. Like, there is a good chance with how this 4 hour is moving, we could find ourselves back down at least into the low 20s, possibly further, depending on how it all plays out. Basically, if we hit that low, retail sentiment's going to shift. Like, it's already kind of shifted. I'm seeing a lot of mixed signals now in social media. I don't think people know where the market's going to go, which is something the market maker loves to do. So, you know, but if we head back down to about 23K, the alarm bells are going to be running off again, and everyone's going to be crying the sky is falling. So who knows what's going to happen at that point in time. That also could push us to a point where we're getting closer to figuring out what's happening with the U.S. debt ceiling and the coming out of Fed now and all the other stuff that's happening in May, June, and July. So it is possible we could drop way further, and this is just the start of it. Because keep in mind, we still have my favorite indicator that I'm using now that I pointed out to you guys last week, which is Chainlink. My Chainlink indicator is still working perfectly at the moment, where when we have a huge spike up, we then have a massive crash down, and it has predicted some massive events over to 2022. This was Celsius. This was the end of the summer rally. This was FTX. And then I pointed out this happening the day this was occurring. And then the following day, we had a massive drop down, and we've just broke the 50. And when that happens, it usually moves down way further. Like, each time this has happened, Chainlink has dropped down below at least, you know, 650, 620. Most of the time it's below $6. And right now we're only at about $7, which means that we still have, depending on how it goes, I mean, it looks like it's starting to range a little bit more, but it looks like we've got more downward action to go. So that's my new favorite indicator. Okay, so anyways, back to Bitcoin. So next we want to do is take a look. That was around 23-ish. There we go. All right, so next we want to look at to see if we could find some reasons for price to go in either direction. Right now, because of the fact the price is bouncing around this 50 EMA, I'm half suspecting we're going to move up before we head down. But we don't have to head up far. So we'll have to see how that goes. But if we take a look at high block, and we take a look at the 1 month, so we can see there's very little in terms of liquidation levels unless we get back up to 31K, which is outside of the area that I'm looking at right now. Doesn't mean we can't get up there, but I'm expecting getting up there being more of a rise 3 on the daily kind of thing. I'm looking for where the 4 hour is going to wind itself. Now we will be able to see a better layout of this in the lower time frame, but I'm just kind of looking on what we have on the larger time frames to see if anything kind of stands out. And we have 24.3, which is down here as a potential point, which would potentially put us in the range of the 200 EMA on the daily. Could we get down that far? It's possible. Dailies can be very like basically you have to remember this was its rise up, right? This was rise level 2, which means that as long as price doesn't breach below here, the structure is still sound. So it could come all the way down to about here and then do its rise level 3. Will that happen? Likely no. Just based on the vectors and stuff, probably this would be our lowest point we would go. But basically, it's got room to maneuver. So we'll have to see how it all plays out. So that liquidation level down there right now doesn't mean much to me. We'd have to see how price action continues. But we're looking for what the 4 hour is going to do. So let's look at the 7-day and see how this plays out. All right, so these are showing a couple more potentials. So if we look up, we're looking at, 28K, 28,450, basically anywhere from 28,450 all the way up to about 28.75. And if we look up here, that actually lines up perfectly. Well, not quite perfectly, but very close to the area of interest that I marked out. It's slightly higher than basically we've got, 28,750. So that is a potential liquidation point. But one thing to keep in mind is that this was a smaller level, right? Like, we basically get up to about 28,450 and then it starts to trickle downwards. So I'm just thinking if they were to claim this entire block versus just the key liquidation point. But 28,450 is the number to beat. And that puts us smack dab right here. So with something like that, let's move to the 4 hour. That'll be easier to look at. So I said 28,450. So that puts us like right here as where the liquidation level is. Let's do that properly. Okay. Large liquidity. So with that, we could find ourselves, this might actually be the rejection point, and we spike up to here to actually ping that liquidation level, and then we just come back down here and we consolidate before we move down. Alternatively, we could spike all the way up to here, get that liquidity, and then come back down and, just screw around here too. Like, there's lots of different options, but basically this is telling me, based on those liquidation levels, this is the ideal spot to expect rejection. So if we move up first this week, I'm expecting the 28.3 to 28.7 level, and then we just kind of have to see where price puts itself. But this would be a possible entry point to put in a short to try to ride the 4 hour next move down. Now, if we're going to look downwards, we're looking at 26.3 to 26,450 and 26.6. Let's see if that matches any of the stuff I wrote down here. So 26.6 lines up with the very top of what I marked off as a rejection point down here. So that is a possibility. Then I said what, 26,350 to 26,450? Yeah. So then we're talking this region as the next liquidation point, our liquidation target point, which basically, so it's either the top of my first circle or the bottom of my first circle. There's no real reason to go much further below that. They could. I mean, it all depends on what the market maker wants to do, but there's not a lot of liquidity down here. So I would probably, I'll still leave these as potential rejection points. It just seems less likely based on what we're seeing in terms of liquidation levels go. And then if we look at the order blocks, so there is very little moving up, but the one order block that stands out is right around 28K. Which lines up more or less with the 200 EMA, but it isn't anything really to write home about. There's no I mean, we could spike up there. There is a potential, like there's a vector recovery there, so it is possible this could be a rejection point for them. It doesn't make a lot of sense to me. What this would make more sense for is not a market maker move. That makes more sense to me as a news move. And we're going to be talking about that this week because there's a lot of big news events coming up this week. So it is very possible that if we have a news reaction, we could spike up to this level to grab a whole bunch of liquidity and then move back down. So that I would see as a target stop hunt, basically. And if we look in the other direction, our key points, we're looking at 26,650 and 26,500. So if we look at those, so 26,650, 26,500. So that puts us right around here, which conveniently lines right up Well, that wasn't quite what I was hoping for. Let's try that one again. What did I say? 26,500, 26,650? All right. So that lines up with the liquidation level that I had pointed out before and my first rejection point. So if we're going to move down, this is actually showing me this is going to be a key point for us to bounce. We could drop further down. It is always possible, but this is kind of what I'm seeing here. What do you guys think? Do you agree? Do you disagree? Are you seeing something that I'm not? I'd love to get your feedback on this, but this is kind of how I'm reading the charts right now. Whether or not I would do an entry at this point, it's a tough call. Really, it would depend on how the markets move first. I've been doing a lot more spot trading. I'm going to go into that a little bit later as well. But if say we get down to here and we know there's an expectation of getting up to at least this 28K mark, I really think it will be higher than that. But I mean, you could be looking at the rejection point's going to be kind of tough because you'd have to have you'd have to kind of see where the prices are, but let's assume it's worst case scenario. So you'd want to have your stop loss below all the potential rejection points. And let's say we're able to get a couple staggered entries and we get in about here. We're talking worst case scenario, that's about a 2.1R. That's not horrible. I mean, it's may or may not on a spot, maybe. I don't know if I derivative trade a 2R return like that because it is possible that we're just going to collapse even further. We may not come back up. Because that 4 hour has been looking really weak as far as upward momentum goes. The only thing I'm trying to figure out is because the daily is riding that 50 EMA. Now, granted, we had a weekend in this, which kind of throws a curveball into all this. So it is possible that 50 EMA riding was just basically weekend consolidation. We'd have to see how things play out over the next day or two. Maybe down to 25K. Is there some support there on the psychological level? 25K is definitely a possibility. That also would line up with the 800 EMA eventually getting there. And even though I know Annie doesn't really point it out, sometimes I like to use, even though it's already been recovered, I sometimes like looking at past vectors, because they sometimes give me an idea of potential rejection points that might just be reused. So 25,456 is a potential item. I wouldn't take that as a guaranteed rejection point. It would just be a level to watch. Just because at one point it was a rejection point for this vector. And that would fit right around the 25K level. It is very possible. It's just right now the price action doesn't necessarily support that. If we go down to 25K, what are we looking at? So 25,400, which is just below that number I just gave you about the 50% fib on that vector. So that is why I look at that stuff, because this kind of shit happens. So that is a potential thing. 25K itself has virtually no orders. Like, it's got some, but it's got a really very little. So I don't see 25K as being like a proper target. This I see as a better target right now if it's going to drop that far down. But of course, as we get lower, this could change. Like we're talking something that may play out this week or by the end of the month or something. So it's hard to say. You're just looking for good spots. Scale back in your top spot positions. Yeah, I hear you. I absolutely hear you. I've been very much on the fence. I've been DCing Bitcoin in, and I'm looking to get Link done, but I'm 99.9% certain. I'm being greedy at this point with Link because I'm pretty certain Link is going to hit below $7. And right now, I think my planned entry for it is, let me just double check this before I say something that isn't true. I think it's about $6.30. Oh, that's right. I was looking at my bot to see what the entry was, but I set it to like $5.50. But that was just because I want to manually activate it as opposed to it automatically go in. So I'm not quite sure where this price point's going to be, but if I look back over here, I believe I was using the daily to kind of price this out. The reason why I was looking further down, all right, the daily's got a whole lot nothing on it. Let's try the 4-hour. Yeah, this is why. Because if you look right now, you really have two options. Because all the EMAs are above price right now, you can't use those as potential rejection points. So you have to look for vectors. And the only vector that you really have starts down here. Which means if the market maker is going to bring price down, which they may or may not do, this may be as far down as it goes. But considering we're expecting more drops on the Bitcoin 4 hours, I'm expecting a drop. So then you're looking at a rejection point of anywhere between 6.5 and $6 basically on Link. And if it goes further down than that, then you're looking, I think that's a vector. Let me zoom in here. Yeah, then you've got like this little itty bitty one right here, which is about the 540 or 550 to 565 mark. So because that is why I'm kind of waiting, because I want to see where price goes. Because of the fact we're expecting 2 more downtrends on the 4-hour, there's a very possibility that we are going to get into this area, and we may go much further than this. We may not. I don't know. But what I want to see is is how the 4-hour plays itself out and actually does a proper level ending stopping volume candle. And then from there, I'll gauge. Like, I'm not going to be greedy. I'm being a little greedy, but I'm not being like must get the very bottom kind of greedy. My expected entry is going to be right around here. And then I'm going to have the bot set up so that it allows for up to a $9 price point. So I'll basically reverse DCA any of my position all the way up to $9. And it will have buy-ins that cover all the way down to the bottom here. So like $6. And now if price happens to go below that, I'm not too concerned, because if we look back, Chainlink since basically since Luna started, it has gone down to $5.50, but it does not stay down there long. So while technically, yes, I could set levels to buy in as far as say $5.50 and I'll have my money back relatively quickly. The problem with that, and I'll explain it when we get to a point where we're talking about grid bots and stuff like that, is that when you have a wider range, you reduce your amount of income. So it adds more safety. But if I'm not expecting this to be down here for a significant period of time, and for the most part, it's above like $6.10 all the time, by trying to buy in at these lower points and nitpicking these bottoms, I waste a ton of potential, because then I have all these, basically a portion of my pot will go to expecting to buy stuff at a level price never typically comes back to. So then, like, you know, if I had done that here, I'd have been waiting from July 2022 down to about November So you're talking what, 4 months before it rebuys, then it goes away, and then I'm waiting another 2 months for it to come down again. Then it comes back up, and now I'm waiting. That was January, so now we're waiting another 3 months. So that's several, like that's like half a year's worth of time that money sits there and does nothing for me. So I'm going to want to have a lower floor, or a higher floor, I should say. So probably somewhere between $6.10 will be my highest point. Maybe slightly lower if I want, maybe $6 just for a sentimental level. I'd probably look and see what the order books look like and figure it out from there. Interested in my thoughts on DOT, trying to buy in below $6. All right, so before I look at DOT's chart, the one thing I will say is that since I, met all of you, we've spoken about DOT, and we've talked about, the pricing of it and how we expect it to grow in the bull market and stuff. And we've had several times DOT has gone down to really low levels, and then we've been kind of iffy about buying it. There are some people in this channel who have been buying it. Some of us have not. But I will say, for the most part, most of us regret not buying it whenever it starts getting low on price, because we're thinking we can get it even lower. So there's nothing wrong with trying to get your buy-ins below $6, but at the same time, if it doesn't hit $6 and then we actually start another rally, you're going to be just like me. And well, you're below $6 right now, but you'll be just like me, wishing that you had bought some when you had the opportunity. Like, how many times, if we look back at the last year, I can remember when so we had FTX happen. DOT went from what was it? Or not FTX, sorry. Luna happened. It went from $23 all the way down to $7. So you had a 67% discount at that point in time, which really, we haven't recovered that price, but at that point in time, it's still a steal compared to what we could have been buying it at. Then it dropped down to $6.50. Some of us bought in, some of us didn't. It popped back up to $10. That would have been, what, a 35% return? Sorry, 48% return. I can totally do math. Then it dropped back down as low as $4.20, which some of us bought, some of us didn't. I being one of those people that didn't. And then it popped back up to $8. So it's one of those things where because we don't know, the markets have been so weird, but DOT is incredibly resilient. So what I'm looking at right now for DOT, like when I see this, it's just been consolidating so much. It doesn't have the same pizzazz that Link does in terms of having a massive spike up and just knowing the market's going to tank right after. But it has been very resilient. And so at this moment in time, looking at it, like really, it's if you're gonna look for potential buy points, you still have to take the market maker system into account. So like we have not properly had we have not had a proper uptick on DOT. God knows forever, at least not on the daily. So on the daily right now, we're either looking at getting to a point where it is forming a W, or we're still in a massive downtrend for DOT. Those are basically your two options, because it is, I don't even want to try to read this chart. It's just gross. Like if you were looking at this and you didn't know it was DOT, you'd be like, well, this coin's over. You know what I mean? It is just, I'm not sure if it's being suppressed. My guess is it's more just the fact that the bear market is just crushing people right now, and it's an ecosystem that needs bullish retail sentiment to really thrive. So whether you get it at $6 or $5 or even $7, there's a very good chance we're going to see these types of numbers again as time goes on. Like, I mean, yeah, like its all-time high is what, $55? And even if it only hits, say, $30, so it hits like halfway between here and there, that is still a 5x at this point in time. So, well, yeah, well, 4.5x approximately if you're getting it 6. So, as far as I'm concerned, it's still worth it. It's just, it's going to be because of the fact it's been struggling. It's one of those things that it's going to be a long-term hold. Unless, like, because you even look at, the rallies we've had. Like, this was a summer rally. So it was at $23, remember? And then we had FTX happen. Everything plummeted. Then we had the summer rally. It went from $6.50 to $9.60. So it was still way lower than what it was before Luna. And then Celsius hit, and we dropped again. Then it started recovering again. Only made it to 730, and then we had FTX. And then we had this massive Bitcoin rally, and we only made it to about 740. So like just slightly higher than the FTX recovery, or the recovery just before FTX. So this is when Bitcoin hit 25K again. So this is basically when it matched, like 25K was the high we had in the summer rally of last year. That is the summer rally of last year. So it's actually down, approximately 21% from when Bitcoin was at the same price. And then you take into account Bitcoin made it as high as, what was it, 31K? And it only peaked at $6.90. So despite the fact Bitcoin actually went up by, a good 18% or so, DOT is actually still down. But it's like that with most of the alts. That's why I keep saying that something weird is going on with the alts, and I think there's a lot of exit liquidity going on right now. This is one of those things you can't be expecting to make money on DOT anytime soon. You start buying into it, it's likely a good long-term hold. It's just one of those things we're going to be waiting a long time to see what it does. You're going to be waiting until the bull market. I mean, you can stake DOT at least, so there's that, right? But you just have to be prepared. You're going to be having a lot of impermanent loss for likely the next year and a half, whenever crypto gets its shit together. All right, let me check at the comments here. 25.4 marked. Nice. Your highest stop buy since January, $6.70. Your average is down at $5.30. Fucking Harry. He is amazing. Well, yeah, his DOT purchases, I'm very envious. He has been adamant for a long time about constantly buying more DOT. And I have to admit, there was quite a lot of times I thought he was ridiculous because I was in super bear mode for a good chunk of last year. And I'm still bearish in the grand scheme of things. It's just, yeah, I've come to the realization I need to really start building out my portfolio in case I'm wrong, and building it out in such a way that even if I am wrong, it's not a big deal because it's not going to be a monetary loss. It's just going to be a hold. All right, Harry, you take it easy. Oh, that's right, because Mrs. will be on her way. You buy now and be happy. Yeah, that's exactly it for me, Tim. And just keep in mind that DOT has been consistently dropping, right? So even if we have Rise 3 on the daily, there's no guarantee DOT's actually going to breach the $7 mark, because this was Bitcoin at 25K. This is Bitcoin at 31K. So if Bitcoin now hits 34K, there's no guarantee we're actually going to be above this. We could wind up having the next high be here. You know what I mean? So, yeah, so there's nothing wrong with buying in. I just would highly recommend you have to do a time staggered approach. Don't be like some people and just be like, well, I'm dumping 5% of my pot into this right now, and we'll just see how it goes. It's going to have to be little tidbits here and there. If you start doing the grid bot system with it, that could actually help significantly. That's one thing I might potentially recommend. which I'll go into bigger detail on Wednesday. But I'm doing that with Bitcoin, and I'll show you how I'm doing it with that. And that might help as well. Since it's just you and me, Tim, do you have any questions about anything I've discussed so far before I move on? You're all good? All right. All right, so moving away from the charts, there's been a little bit of news this week, nothing too crazy. There are two key things I wanted to bring to light. I'm not sure if you saw this when I was talking about it in the Discord, but Hong Kong did. They basically came out and said that crypto assets that are inside of an exchange are considered the property of the investor and not the property of the exchange itself, which is a huge disparity between what we have in the Western world versus what this is now going forward. So the reason for this, was because there was like another exchange in Hong Kong that basically was going under. And the reason why determining who owns what is important is how creditors get access to their money. So in a typical bankruptcy case, what winds up happening is they say, okay, we're going bankrupt. So they're going to liquidate all their assets and their creditors get a piece of whatever is there, right? Even if they're not made whole, they get a piece of whatever is there, and different creditors get different access, blah, blah, blah. Like most of us understand the generals of how bankruptcy works. Now, when you look at something like Celsius, if you remember, had a very similar legal action happen. The lawyers were trying to get the courts to decide, do the crypto owners, so like you and I, if we had put money into Celsius, the crypto that we invested into Celsius, who owns that? And the US courts decided it's owned by Celsius. So that's similar to the banks, where it's like if you give them $100, you don't have $100 with them. You have $100 IOU from them, but that's now their money. So now you just become a debt holder. Your property is gone. And that's a big difference. So when Celsius died, then what happens is that we're just creditors, which means that when Celsius gets completely liquidated, we get a piece of the pie based on our percentage of our debt compared to the total number of assets. And some creditors, especially like ones that had corporate bonds and stuff like that, if those existed, they will get their money first, and we get whatever's left over. So basically, all the Celsius holders are only going to get a small fraction of their stuff back. Now, had the US ruled that crypto was our property, then that's like a brokerage, where if I give them $100, that is still my $100. They're just managing it for me. That means that they cannot give that money to somebody else. They can't use it for their own business purposes. The creditors don't have access to it because it is not the company's money. It's my money. So this statement this really separates the US and likely most of the Western world from Hong Kong establishing their new presence as a crypto friendly country. Because what's going to wind up happening, this means that if we had another Celsius happen, but this was Hong Kong Celsius, all the money that I put into that exchange, I'm owed. So if I gave them 5 Bitcoin, I get 5 Bitcoin back. Short of them, of course, misappropriating my funds. In theory, if my 5 Bitcoin still exists anywhere on their platform, I'm owed that 5 Bitcoin. If not, then there's going to be some sort of disbursement between all the people who hold Bitcoin and getting portions of their funds back. But in any case, we're the first ones to get Bitcoin or, whatever funds we're using. the creditors, all the people that Celsius owes money to, they are last in line at that point in time. So that's actually really good for people like us. This means that dealing with Hong Kong exchanges or Hong Kong based exchanges and Hong Kong based lending platforms and stuff like that means that our assets are actually well more protected. And should a platform fail, we have a much better chance of getting some, if not all, our money back, which is going to be another thing to drive a nail into the coffin of US based exchanges. So that's a critical thing that I thought I'd mention. I'm hoping the US and UK and Canada will follow suit, but it's unlikely. But we'll just have to see how it goes. But in any case, this is something to watch very closely, because this is now making Hong Kong look like it's much more appealing in terms of crypto investment in the future. So yeah, just something to keep in mind as they lay out their plans over the next few months. The second major thing I wanted to talk about was this. Bijan had posted this on the Discord earlier today. And it's basically talking about stuff we've already spoken to before about CBDCs. One of the things I had mentioned about them was that adoption was going to be tough. And we've already seen it in various different countries that have tried to implement it. Adoption is hard. Like, most people don't want anything to do with it. And so China is getting to a point where they're starting to force this to happen. The problem is that it's a fucked up scenario right now. I'm not going to go through this entire article, but some key points is that they're going to start paying their public sector employees in their digital yuan, basically. And that includes, government workers, or their doctors, official media outlets, teachers, all that sort of shit. So that means that these people are now being forced to have to use CBDCs, which is something I was kind of expecting to happen to everyone at some point anyways. I just expected more incentives as opposed to just, this is how it is now. But and it even says here they tried doing some incentives. Small scale trials using it to give out government subsidies. So if you were a person that, say, was on welfare or received disability or unemployment, or I don't know what benefits the Chinese sector has. I'm just trying to relate it to us. So if basically the government owed us money, we'd be paid in our digital currency as opposed to standard cash, which makes sense in terms of trying to get people to adopt it. Because if you're getting free money from the government, well, maybe not free, but like owed money from the government, then you'll use it in whatever format you can get. But one of the key problems with the digital yuan is actually mentioned right here. The limited capacity to settle transactions. This means a lot of businesses don't support the digital yuan, which makes things tough. Now, can you imagine if you are a public sector worker? So you're a school teacher in China. I can imagine they're not making a ridiculous sum of money. But whatever, now they're going to be forced to be paid in digital yuan. But your local grocery store, one of the few you're able to go to, doesn't accept digital yuan. Well, what the fuck are you going to do? This could be an actual very serious problem for China in the near future. It is possible that this forced adoption might force businesses to have to shift. I don't know. I didn't see anything in this article that suggested they were going to mandate it. The closest you see is the paragraph right below where it says they're trying to encourage businesses and public utilities to accept it. But at the end of the day, that's not mandating it. That's, come on, man, would you please just accept this stuff? So it is one of those things where now you could be a public sector worker in China, not have the ability to pay your electricity bills, not have the ability to buy food or put gas in your car, because all your money is tied up in a currency none of the businesses around you will accept. So that gets a little scary, and is something I've actually worried about in the Western world too. I don't think we're going to have forced adoption, at least not anytime soon. I feel like China is really swinging the hammer at this thing. Like they're really tossing this at their country hard. And I'm sure they have their reasons, but I don't imagine the Western world would take the same approach, because it's just, we won't accept it. If they all like fuck, we can't get people to wear masks when there's a pandemic. We can't get people to get vaccinated against diseases. We can't have people pay their taxes properly. We can't even get people to agree on who gets to use what bathrooms. So to then suddenly force people to have to use a new digital currency that you can't spend anywhere, there is going to be like massive riots to the street. Like France is going to be looking at us and going, wow, man, we need to step up our game. So I can't imagine they're going to go that crazy. Adoption is going to be a key thing. Now, ideally, if you get adoption with a major payment provider, so like say Visa and or MasterCard, start processing everything through like the digital dollar or whatever it works itself out to be, that would make a big difference, because then people could just basically pay for everything on their Visa and MasterCard and then turn around and use their digital earnings to pay off their credit card bills. Maybe that's how it's done, because most companies will also accept Visa or MasterCard, right? But I don't know. In any case, it is just something China... The problem that I have right now is that a lot of stuff that was happening in China 10 years ago and since, we all thought was absolutely ridiculous in terms of what they were doing, what they were trying to accomplish, and the fact that we thought that they were trying to just build this kind of dystopian empire and stuff like that over there. And I'm not saying that it's going to be all, Mad Max style of living over here or anything like that, but there's a lot of things that they came out with that are slowly starting to be adopted into Western civilizations. Not necessarily to the same extreme, but we're seeing the tech that they're rolling out starting to hit us too. So it's one of those things that now this is like these are prophecies. China is now prophetic in terms of how the rest of the world is going to be at some point in time. So it's just something to keep in mind. All right. We are now just over an hour into this all. And the only thing I have left to talk about is... Oh, hold on. Let me pull up my notes here to make sure I didn't miss anything. Oh, yes. The volatility for this week. This is a big news week, and when I say big, I mean like probably biggest news events of the year is happening this week. So that doesn't necessarily mean the markets are going to go crazy, but there could be a lot of volatility. Just to give you some idea of what's going on, major tech reports are coming out this week. Microsoft, Google, Meta, and Amazon are expected to give their earning reports this week, and all four companies are expected to report negative earnings growth, meaning that their revenue has shrunk this year compared to last year. And they represent, just to give you some data about this, those four companies represent 14% approximately of the S&P overall, and 30% of the NAS 100. So if those companies are showing negative earnings, that's going to have profound effect on the markets, because it basically shows that the markets need to consolidate and contract. In addition to that, the US GDP comes out on Wednesday, and it actually is going to be a weird one, because right now I think the expected number is about a 1.8% quarter over quarter GDP. Now, 1.8% doesn't sound too bad, but the Feds have mentioned in the past their expected GDP growth for this year in general is 0.4%. That means that if we have a 1.8% growth this quarter, the first quarter of the year, how do we get from 1.8% to then averaging 0.4% the rest of the year? The only way that happens is if we start having negative GDP growth the rest of the year. So 1.8 could potentially indicate that there's a massive amount of economic shrinkage to occur over the next, how many months are left? 7 months. So the markets could actually get very spooked by that. We'll have to see what those numbers look like. And then the PCE is Friday, which is that's the Fed's key indicator of how inflation is working, and how the price the interest rates are working for dealing with inflation. So that PCE number on Friday, depending on how it plays itself out, could very much spell out what the Feds are going to have to do in May in terms of adjusting their pricing stuff. So you got the tech reports, you got the GDP, and you got the PCE happening all this week, which could spell all sorts of volatility for the markets. It's going to be a really ridiculous week. Whether or not it actually does anything is a whole different story. We could wind up just bouncing all over the place and still ranging. We've done that many times before. I don't know at this point. It's just something to keep in mind. Okay. Let's see. What else do I've got? All right. This Wednesday, starting at 3 p.m. Eastern, which is 8 p.m. UK time, I'll be starting my quantitative trading course for all you guys. It's a free course. I'm not going to be charging anything for it. But I'm going to start talking to you guys about, some basic bot design, a basic introduction to bots and things of that nature. I know many of you are already excited about this. I'm looking forward to it too. It'll be my first real attempt at teaching you guys, having like an actual proper educational course. So you'll have to bear with me a little bit, but we'll see how best we work it out. But I honestly think the bots, especially with the stuff I'm going to teach you guys first, is going to make a big difference for all of you in terms of being able to manage this market a lot better, because obviously price points in the markets are all over the place. And I know many of us, we're learning the market maker method. We're getting better at reading the charts, but it is still if this was any other time, we'd be perfectly fine. But because we've had so much ridiculousness, it's still really hard to read the charts, even with all the knowledge we've built up over the last year or so. The bots will actually really help with that because it removes a lot of emotion out of it. And it also allows us to do things like properly DCA stuff. One thing I wanted to show you as an example. Let me swap out my screens here. All right, let's see if this pops up. Okay, so this is basically one of my live accounts. This account I set up specifically. This is live data, and this is specific for you guys in terms of I wanted to show you how to build basically a bot portfolio from scratch. And I'll be going into this in greater detail starting Wednesday, but just to give you an example of what's going on here. So right now, Bitcoin, this happened, I think I set this up on the 20th. So that was what, Thursday? I had set up two bots. I had set up a Bitcoin bot, and I set up a link one. The link one hasn't activated yet because, as I mentioned earlier, I'm waiting for a certain price point before I jump into it. But these were my first two bots to try to enter into the market and be able to produce some cash flow and be able to deal with the volatility. So if we look at the Bitcoin one, my entry price, if I remember correctly, was about 27.7. But I had expectations of it getting down to 27.1. So that is why, my price range, my floor was about 27.1. My entry point was 27.680. So basically what wound up happening is... Fuck off. All right. So basically, what was it? Thursday or so, rolled around to the 20th. I'm not sure exactly when I placed it. I placed it at like 5 o'clock in the morning. So what would be 5 in the morning? So about here-ish. So when we were at 28.5, I set up this bot and I said, if we get down to about 27, I don't remember why it was 27.689, but I know it was in that range I wanted to start. If we get down to that point, I want to enter. And so, sure enough, we got down to just at the end of Friday. We spiked down. We did our entry. We actually got down pretty much right to my floor, the 27.1. And then we've been ranging since. Now, if you look, my total P&L is minus $3. So you're looking at this like, oh, you're down 0.62%. Oh, that sucks. But there's two key takeaways from this. The first is we hit my expected downtrend. So we basically bought in at 27, what was it, 680? And we've also DCA'd a couple of times. So my actual buy-in is lower at this point. So if I was expecting to actually buy in even lower, I could actually have DCAs various points away. Like we were talking about 25K earlier, 25.4. I could have had my floor down here and the price could have just kept dropping and whatever, and I'd still be DCA buying in. So I'd actually be getting a stronger Bitcoin position while the bot is still operational. And as we consolidate and as we jump around, it's doing little oddball sells here and there. And should we get that spike up, the one I was talking about earlier, that might push us up to about 31.5, it will then sell off all that Bitcoin. It'll basically reverse DCA all the way up. So I'll make my money. But the other key factor is that I'm actually producing cash while this is occurring. If you look at the setup here, I've actually made $1.42 in grid profit so far. Now, I know you're probably thinking to yourself, wow, $1.42. Craig, I'm surprised you don't have your own private island, with a nice mansion on it and stuff like that, because you were just making bank. But you have to factor in. So we basically, we did my buy-in on Friday when we had that big drop, and we've consolidated since. And since then, I've made $1.42. I still have my position I started off with, right? Like I've got 0.0163 Bitcoin, and I've got $51 because price could drop back down a little bit. And so it's got a few more buy orders, one or two. All right, it's got one left. But this $1.42, that's just pure profit. I've made that just off the volatility. So my initial $500 investment is still wrapped up in this. That $1.42 is just free money. I could actually, I could pull that out right now if I wanted to. So I could pull that out and use it for whatever I want. Now, the key factor is remember, my investment is $500. Now, if you want to do some math, 1.42 divided by 500, or hold on, 1.42 divided by 5, can't do math here, hold on, you know what, fuck it, I'm not going to pull out the calculator again. Basically, it worked itself out that if I made $1.42 over 4 days, that equates to roughly $130 a year. All right. Now, $130 a year divided by 500, that is 0.26%, or that's like a 26% return, which means that even if Bitcoin just ranges for the rest of the year, I'm making a 26% APR of additional money. And I still have my initial investment. So even if Bitcoin just ranges for a ridiculous amount of time, I'm pulling in a 26% APR as long as Bitcoin is above 27,000. Now, if I was really caring about cash flow here, I probably would have had that range be much lower. This is actually more of a low-term bot because I'm expecting that spike up within the next week or two. So if we dip down for a little while, I'm not going to be making money, but it'll just wait patiently, waiting for that spike up to occur. But if I had set this up because I was expecting a long-term annual cash flow, this would have a much lower floor. Like we'd have to probably get down below, like say 17 or 16K before it would stop making me money. And I could still have a similar return to this. So with that in mind, that means now this is way better, in my opinion, than any level of staking or any level of just, a liquidity pool investment or stuff like that, because it's dealing with coins that I know and appreciate. I'm going to be holding them for a long period of time. And that when we have the big spikes like we had earlier this year, where suddenly we had like a 45% rise in the course of like a week or something like that, I will be able to cash in on that. But if we dip down, I'm DCAing into my coins as well. So when, Tim, you're talking about something like DOT, you could literally set one of these up, set it down to like, say, a $4.50 floor, and I don't know, a $20 ceiling. And it will make you money on all the fluctuations during that time. And it doesn't matter where DOT goes. As long as it stays above, $4.50, and you're making money the entire time. And if it takes a year for it to get high enough before it to hit, like, say, your $20 ceiling or whatever it is, you're making money all during that time. And if price does dip down, like if you're buying in right now at 6 and it does dip down to 450, you're DCAing at set intervals in that price, so that your average, like if it got all the way down to $4, your average might only be $4.75 is your average buy-in. So to me, doing something like this when we're not sure about how the markets are going to move, but we want our long-term holds and we want cash flow, this makes a ridiculous amount of sense in how to accomplish it. The key with this is that you have to be you have to be able to set it up properly. You have to understand how it works. You have to understand all the nuances to it, how to properly set it so you're making money, that you're not over investing too much, and you have plans in place if price moves out of your price points. Like for me, for example, with this, if price drops below 27,100, my bot stops making money till price comes back above. I already knew that was a thing. That's how I planned this. If price drops, if we say get down to that 25K level, because we're expecting 2 more drops on the 4-hour. I don't know how that's going to all play out. If we just drop down, we hit 22.5 or we hit 25K, then my next step is setting up a second bot. I already have cash set aside for another buy-in of Bitcoin. And all that happens is I just started up again with a new floor and a new ceiling. And this one still sits in the background. The other one starts making me money. And then eventually price will start going back up again, and then everything cashes out, and I made profits all along those lines. So that's the kind of thing that I look for. What is going on here? All right, hold on. Now you get to see my YouTube stream. There we go. Okay, so that is, can you use a bot to grow Bitcoin instead of cash flow? Yes. All you would have to do, and I would use it with something like this. So all you have to use is a BTC pair. So the money, like your profits, come from whatever your second pair is. Oh, it's still not showing my stuff properly. Hold on. Hey Jeff, it's good to see you, buddy. It is still not showing that. All right, hold on. So I'm looking at my stream and it looks off. It's still showing the my other stuff. Let me go ahead. Let's switch out windows here. See how this works. Either that or my YouTube feed has gone a little weird at this point. Okay, are you guys seeing my charts? You're seeing my charts. Okay, so it's just my preview window is messed up. All right, so you're seeing the charts. I'm not even going to look at the preview window. We'll just have to hope and pray for the best here. Okay, so basically what you're looking, if you want to just earn more Bitcoin, you'd want to be using a Bitcoin paired chart. So in this case, the one I've been eyeballing for a long time is AST. AST is a real shit coin. It's useless. It is not something you want to hold on to long term, but it has some wild moves. It's low volume. It's on Binance. It's not something I would dump all my Bitcoin into. It would be something I'd put like maybe tops 20% of my BTC into. But the key factor is that it has spike ups all the time. Like, you can see this, right? And when we're talking spike ups, these are not mild spike ups. We're talking, you know, that's 100% spike up there. That's a 60% spike up. And so, and it ranges a fair amount. Like, it kind of goes all over the place. But what I'd like to do, right, is I wait for price to get somewhere right now in the 300 to 400 range. And I'm probably going to wind up revising it because we've been hitting lower highs since September of last year. So it's been slowly dropping. But basically, you'd set up a bot range that would cover, you know, an expected spike up. Let's just say the 800 EMA is going to be our top target. Let's say we set something like that. And then we'd wind up looking at using, you know, the methods we need to use to find out a proper bot. And let's say the proper bot config. And let's say once we hit, you know, say around here, we hit about 321. That's our trigger. And you're basically, this is where knowing the market maker method helps, because you can better determine how the markets are going to act. Like, I know we're having bigger problems determining how it's going to act, like at any given moment in time, and like say even what will happen in a day, but we're getting better at detecting levels and detecting target points and where price will eventually get to. So when you keep that in mind, it's easier to do this, because it's basically, even if you're wrong right now, you don't have to worry about your timing so much, because ultimately, you know, price is going to go where you're expecting it to go based on the market maker method, right? So even if you're wrong and things kind of don't go your way for a little while, you can have the confidence in knowing it's eventually going to get there. So it's way less pressure compared to derivative trading. And to top it off, it's the biggest folly people have using grid bots, because they're very simple to use, but the biggest folly people have is they use retail patterns. We have that advantage that that's not what we use. We can see when downtrends are supposed to end and where uptrends are going to go, and we can use that to our advantage. So in this particular case, you might turn around and say, okay, our buying's going to start at about 300 and we're going to be buying all the way down to 182. So let's say you put in like 1 Bitcoin, right? So what it'll do is when it triggers at this price, like you would set the bot up, you know, you can set it up whenever, and you just basically say when it gets down to, say, 311, that's when it's going to buy. So if you say have 1 Bitcoin here, what it will do is, based on how many grid lines you have in your bot, it's going to buy a percentage of, it's going to buy a percentage of AST, enough to be able to sell BST or sell AST at every single grid line above your price to your ceiling. So let's just say it would look something like this. And it would be an even amount. So like, let's say, you know, I'm using really rough numbers here, but let's say it's like 0.05 Bitcoin per line, right? I think that's probably a little too high, but just work with me here. Then every time it hits one of these levels, it's selling 0.5 Bitcoin of yours. That's going to make you a sizable amount of Bitcoin every single one of these levels. And then when it goes down and it goes up, you're going to be buying back in and selling more of it. And then down here, it'll DCA more of your position. So if you have a big spike down, it's going to be DCAing in more and more and more and more and more. So by the time you hit the bottom here, your 1 Bitcoin has been completely converted into AST. But then when it spikes up, it's going to sell off a good chunk of that to make you profit. And as I said, with this particular coin, it has massive volatility, and volatility is great in a grid bot. So you can see, like, this is on the daily. There's a lot of times it'll just randomly spike up 40%. That's what happened March 20th, all right? And then we had another massive stop hunt here that was 31% on the 28th. And we had another one here. So like all of these would be making you ridiculous sums of Bitcoin. And then when the price comes back down, you're buying back in, but you made money on all that volatility on the way up. And if price stays up, in a situation like this, you would suddenly have 30 or 40% more of your Bitcoin position based on whatever your initial investment was. But AST is not necessarily the best. It's riskier because AST is a shitcoin. So you have the risk of potentially low volatility periods. You have the chance of it getting delisted off of, say, something like Binance. And it's not a coin you would want to hold long term. So that's why I'm saying, like, this is for risky yet fast earnings, but you wouldn't want to put your entire Bitcoin position into it. That's the key. But you could do it with other things too. So like if you were saying doing DOT, you could do like a DOT BTC charting. And then what basically winds up happening is you would figure out whatever your range is. I wouldn't necessarily use this, but like let's swap over to my indicator. All right, so we look at something like this, and this gives a better visual representation of how DOT's looking on the BTC charts. So on the 4 hour, it looks like we're hitting the bottom of a range, but it hasn't really ranged. It basically went up and it came all the way down. Let's see what it looks like on the daily. So the daily kind of looks like it's ranging a little bit better. So we're still at the bottom here, and we could basically... it swapped on me. That's... okay, let's try this one again. Dot BTC. All right, that looks more like a proper range. So we're still close to the bottom here. So you could wind up buying in BTC, and when it'll basically buy enough DOT and then sell that DOT for more BTC as it goes up. If you, however, if price happens to go below, it'll have DCA'd all the Bitcoin you have into DOT. So you would have still bought more of your DOT position, which you're fine with for a long-term hold. So basically you have two coins you like and you're making money on them. The worst case scenario is price moves out of your range and you either have more Bitcoin or you have more DOT. Those are basically your two outcomes. So in a situation like that, it is almost a no-brainer because you don't have any risk of true loss. Because at the end of the day, you still have more coin one way or another. From a like a USD standpoint, sure, you might be down, but eventually, you know, if say you're just full of DOT, then eventually when DOT's price goes back up, you're fine. Or if you're full of Bitcoin because this skyrocketed past your top part here, then you just have more BTC. Does that make sense? As I said, I'll go into way more detail on this on Wednesday, and it'll be properly laid out, and I'll give you guys some step-by-step guides on how to do things. And yeah, but this will be where we're starting from in terms of trying to establish a basic floor. So like what I was showing you with my link in my BTC purchase, it was all about, it's all about establishing a baseline. So then this way, I'm still expecting more downward action, but you can never be certain. We've expected downward action before, and then suddenly the market's shot up 45 to 75%. So this allows me to be in the game, and if I'm right, it DCAs in my position more, which I'm totally fine with. If I'm wrong, it, you know, makes me a great amount of profit. And if it just goes sideways for a significant period of time, which we have happened for weeks or months from time to time, then I'm making money all throughout that consolidation. So to me, it's a no-brainer to do things this way. All right, so we're now 90 minutes into this. I've basically covered everything I wanted to talk about today. The quantitative trading course starts Wednesday, 3 p.m. Eastern, which is 8 p.m. UK time. It's going to be in a Google Meet. I will wind up putting the link up in the Discord before the event starts. So be prepared for that. But I'm open to any other questions you guys have about anything we've spoken about today, or if there's a topic I haven't covered at all. I'm all ears. This is your chance. The one nice thing about doing the Google Meet will, of course, be that you guys can all start talking again, as opposed to having to just type there with your typity. I know we're more used to Zoom. It's just from a monetary standpoint, I already have the professional version of Google Meets, so it just makes more sense to do it that way than a professional Zoom. I don't want to spend $300 just so we can talk for longer than, a few minutes on Zoom. All right, so it looks like we are good for now. I want to thank you guys all for hanging out with me. If you have any other questions or anything else you want to discuss, obviously feel free to reach out to me on the Discord. And beyond that, you guys have a wonderful day. I don't know how the markets are going to play themselves this week. I still think it's going to be a lot of volatility. Whether or not we actually break out of the range is anyone's guess at this point in time. So we'll just have to see how it all plays out. But you guys have a wonderful day. Thank you so much for hanging out with me. I love all your beautiful faces, and I will talk to you all soon. Bye, everyone.